lot on the S&P that I've just been talking about right there. So that if I wanted to, I could take a screenshot of that and post it into Smart Alpha. You could see what we're doing. But the point is that this is the total profit and loss of the day of these screenshots and trades that we're talking about in the room. Now, every now and then I reset. Every now and then I reset that account, you know, back to where we started out at, and we obviously reset it back to you know, back to say, you know, $100,000 or whatever. But just to give you an example, that $100,000 account is now at $4.8 million since we brought it back to $100,000 and started all over again. 100 grand, 4.8 million. When we're doing these little trades to show you guys these types of trade opportunities. So you can see it's, you know, it's part of the process. It's all part of the process. It's the ones that we take screenshots of. It's the ones we pop into the tweets. It's the ones we talk about in the room. It's the ones we actually put in there for you guys. And it usually follows me taking an actual trade for the bank. It follows me taking a trade for the bank. Then I take a screenshot because I can't do it first. I've got to make my money first, right? I've got to make a living first. And then we do it on the screens so that we can actually show you what it is we're doing so that you guys can pick up exactly what the trade is. That's why it's, you know, sometimes a few seconds later. Well, that's just by necessity, of course. Welcome in, guys. It's just after 1 o'clock. Hope you're good. It's Thursday, the 3rd of March. And we're chatting about a few things today. We've just taken a buy trade there on the S&P from a price of 77. It's just traded 88, which is pretty good. 10 points higher. Just looking into this idea of driving price towards the nearest liquidity. The ice cream storyline revisited, basically. Ice creams revisited is what we're talking about, right? You'll hear Paul mentioning the ice cream storyline many times. We're going North Beach, we're going South Beach. Well, that's what it is. That's where we can see the beaches because they're crowded, right? The beach is crowded, the beach is busy, the beach has all that activity. Why the hell would you go anywhere else? You're going to drive to that beach because that's where the business is. That's where the dealers are going to get the business. So they adjust their liquidity to get into that price area. In the short side of the book, the inside market, they adjust their liquidity to get to that busy business. Do you understand? That's why the short-term book is bullish, but the macro book is bearish. Make sure you understand that. The ice cream vendors want to trade where the business is. It's just auction theory, guys. It's auction theory. You're not going to put a big market out in the middle of a field where nobody drives past, are you? Nobody's going to visit you unless somebody happens to be flying by in a helicopter and says, "Oh, look, somebody's having an auction down in that field. Let's just plant ourselves down and let's see what they've got for sale." Where do you put your auction? Where do you set up your car boot sale? You set it up somewhere that people are walking past or driving past. Footfall. 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 The same as the ice cream vendors. The ice cream vendors are going to where the business is. They're not expecting the business to come to them. They've got to position themselves where the business is, and that means driving to that location. Driving to that location means not doing any sales during the way. They're just driving to get to the business, right? So that means that they're going to withdraw liquidity, all their blockages, all the stops, all the various bits and pieces that are in their way. The book is going to go bullish, and the price is going to drive to where the two-way liquidity is located, or the liquidity is located where they can get two-way business transacted. And that's why we were able to buy beautifully off the 77s, currently trading 90s. Oh yes, another very nice winning trade. Very nice winning trade. So welcome in, guys. Welcome in. What are we seeing today? Not an awful lot, to be perfectly honest. The big sell-off on bonds yesterday was exactly what we talked about. All the people that thought we were babbling on about conspiracies and all that kind of stuff were proven to be wrong again, because the bond price collapsed last night. And you know, when we were talking about this collapse in bond prices, it was before it collapsed, of course. And we said that they're going to try and drive this bond price down, and that's exactly what they did. They absolutely smashed the bond last night in the US session afternoon. And you can see that smash and grab right there, right into the closing bell of the US equities, was just genius. But guess what, guys? Out of the whole entire retail space, you were the guys that were short. Because everybody else is thinking, oh, the Ukrainian risk, bonds have to go up. And you guys are talking about it, because I know you guys are talking about it, because you've asked questions. With the question a few days ago about the concession at the beginning of the month. People are remembering that there's a sale on bonds at the beginning of the month. Well done. Can't remember who asked the question, but well done. Hopefully, more than well done, hopefully you've been paid for knowing about the concession process. Knowing that with inflation rampant, the concession needs to be huge, it needs to find some real money sellers, and therefore selling into top edges when the opportunity presents becomes absolutely golden opportunity for us to make some really easy cash. The concession process is back on the game again this week, this next few weeks during this cycle. The concession process is live and kicking again. Interest rates are on the move. And that means the concession process is back in focus. The easiest money that a bond trader will make is during the concession process, during an interest rate cycle. I'm not talking about interest rates being flat, I'm talking about interest rates moving. We also talked about oil. We were able to call basically the bottom edge of oil and make sure that everybody was able to take advantage of that. The bottom edge of oil came in at 112. It's rallied back up again to 115 nearly. That's another $3,000. And yes, we did call it. I told everybody about this earlier. We talked about this drive on the purple line against a red line that's not moving. That is a fundamental shift in terms of bottom edges. Did I not cover this morning? Somebody answer. Did I not cover this exact scenario this morning when we talked about the crack spread being flipped? And I said, if the purple line, I drew the whiteboard out, I talked about it, and I says, if the purple line drives and the red line doesn't into a low price on increasing volumes, that is the bottom edge starting to form. It's not a crack spread buy, but because it's not a crack spread buy, it should be a crack spread buy, and because it's not, it's a buy, but it's a macro buy. The crack spread will now be short selling. So when we thought about that into the bottom edge here, we start seeing that bottom edge coming in at 112 wholesale. And what happened to the trade, guys? That 112 wholesale has just traded 115. $3,000 higher. You couldn't make it up. You couldn't make it up. It's crazy, isn't it? Absolutely crazy. Now, it looked as if we were starting to get the whole thing getting busted here. But obviously now we're looking at that getting busted here and saying, okay, this looks like that drive lower there is probably going to put the brakes on this whole move. And that we did this the last time as well. When we know that's happening, we start doing measures, don't we? So we take a measured move from there to there and we say, right, well, where is that busted? Where is it going to go to? And we start looking at that area there. Unfortunately, or fortunately as the case may be, we started to see something different happening. We actually got a crack spread top edge. You can believe it! We actually got a crack spread top edge for the flip reversal right there. Unbelievable. Take a look for yourself. Tell me that that is not a crack spread grail trade opportunity right there, guys. Couldn't make it up. So we got the big purple drive here. We got the red line not doing quite the same. We got a big drive on the blue line, which is suggesting that perhaps this is flipping over. Perhaps it's going to move into a macro sell. And then when we get a grail sell, we're thinking, well, maybe it's not going to be a macro sell after all. Maybe it's going to stay a macro buy trade, because obviously we would have expected the blue line to drive down past this narrative here and for this to become a slightly different story. Well, as it transpires, it looks like it's a grail. It looks like it's a grail sell. It's another grail sell there, by the way, just in the last 60 seconds or so. And obviously, based on those two grail sells, that suggests that we should be seeing, buyers coming back in at lower prices. That's what we would expect to see, is buyers coming back in at lower prices, and obviously that's what we would start looking for. So you can see that there was a grail sell here and there was a grail sell here, and that's perfect for the skew narrative to evolve into that short play away from those prices. Scalp selling, macro. Looks as if it still might be bullish, but we can work with this, right? That's why we take both sides. If we want to do this, we take both sides. So you can see that storyline has been unbelievable. After getting short heavy into this phase here, down into the bottom edge, and then flipping this trade over into the bottom edge, and then just scalping it. Because look at what happened into the bottom edge. We actually got the kind of grail buy trade as it rolled away from that bottom print. And that is beautiful. So you can see, oh, look at that sell, guys. Look at that sell. We just called it before it happened. 114.30s, just trading 113.30s. We just made $1,000 in 3 minutes. We called it live in the room. You couldn't make that up, could you? $1,000 in 3 minutes. My God, you couldn't pay Goldman's 20 grand a month for that. Is that super sexy or what, guys? Is that super sexy? Damn right it's super sexy. Look at that, guys. 114.30s. 113.30s. Look at that. 113.36. High price 114.40. $1,000, 4 minutes. Pretty crazy, right? Pretty damn crazy. Beautiful trade. Unbelievable stuff. Unbelievable stuff. Live room calls for $1,000. Who could have thought it, guys? Who could have thought it was possible? Except for you guys, of course. You guys can see that trade evolving yourself. Anyway, welcome in. Hope you're all good. It's been a good morning. Guess who killed it on the RGLs, Kim? All those glorious bond traders. These guys, my God, it's not a lunch they owe me. It's a world bloody cruise. All these RGLs. If you compounded the RGLs, Kim, for this week only, compound, one lot, your account would have increased by over $100,000 on a one lot compound this week on RGLs. A one lot, $100,000 this last week simply on RGLs. You might be saying, how's that possible? Well, a couple of days ago we did $8,000. $8,000. Last night, we did $6,000. If you compound 8 and 6, even those two trades, let's assume you're trading ones and you go up to fours, and then you do $6,000 on that extra, well, you started in ones and you went up to fours, and you made $8,000 on 4 contracts before that happened, then of course you're starting to make maybe around about net, probably about 20. And then you've got 20,000, you're probably going to be able to do maybe 7 or 8 contracts, and then you make $6,000 per contract. That's about another $40,000 you're making on top of that. You're going to be near $100,000 profit compound in one single week trading RGLs from the RGL to the London Open, Frankfurt Open. 100 grand on a single contract, and people still to this day don't trade them, and they're leaving a 6-figure sum, and that's on the one lot. That's on a one lot. If you start with a 5 lot, guys, oh my goodness, oh what the hell, you've made over $1 million this week if you start with a 5 lot. Sounds like that's not possible. Do the sums. Do the sums for yourself. Don't take my word for it. Do the sums for yourself and you'll soon see. So welcome, guys. Welcome in. Markets have been a little bit all over the place just now. There's not a lot of stories evolving. Stories from Russia are still the same. There's no real particular breakthroughs in any way, direction. Obviously, stories about some intensification of trade. The fighting, the conflict. We're starting to see some of that just becoming a little bit almost boring to the markets. And I know that's a horrible word to use when there's so many people in the in the front of that conflict, but the markets get bored really easily with news. That's why when a conflict starts and the big, everybody gets dead excited and everybody runs around like headless chickens and starts buying and selling crazy nuts, and and everything's moving in massive volatilities. But a week into the trade, everybody's kind of bored with that headline now. They want to see something new. They want to see a breakthrough. Markets discount very quickly the price. They are a very efficient discounting function. So unless we start seeing a massive increase in the intensity of what's going on, or a ceasefire, anything in between is going to rotate the market. It's just going to rotate the market. Do you understand? It's going to rotate business. It's going to be one of those things that simply just no longer has much of an impact. It no longer has much of an interest. The ramifications of it is going to be felt in things like inflation, and that's something that we start paying attention to. But again, the market starts normalizing to the fact that we've now got $115 oil. Everybody starts working around the fact that we've got $115 oil, and they go, what's the problem? Well, the problem is, what happens if it goes up to $150? What happens if it goes down to $80? Well, when it does that, then we'll know. We'll be able to trade the next big price action narratives, and that's what we start to see. So as I said, the market gets bored very easily. It loses patience with stories. It wants things to change. The market wants something new to discount. The market wants something new to discount, and that's what we're watching. Obviously, is those discount narratives unfolding every time we see a trade evolving. We're looking for those discount phases to evolve. As far as what else we've seen this morning, there's not an awful lot, to be perfectly honest. We're obviously going to be watching how this equity market behaves. We've had a few questions about what to cover in classroom today. We want to recover the visit to the ice cream beaches. We want to be back into looking at those busy beaches, north side, south side. I gave a shout, by the way, this morning for a buy trade on the S&P at 78, sorry, my mistake, my blunder, guys. Okay, so what? So we gave a shout out for this buy trade at 78.75. We talked about the ice cream storyline. What's that price now trading, guys? 95, right? 90 bloody 5. Nearly $1,000 on that trade. What do you think? Pretty good? Were we right? When we shouted this, were we correct, guys? Well, even when I took the screenshot, it was at 81s. Come on, guys. Seriously, it went just traded a high print. It's just traded a high print of 96.5. 96.5. It's nearly $1,000 on that little buy trade. Just visiting the ice cream. Well, they're not visiting the ice cream. The ice cream's visiting them, right? It's the idea of the busy beaches. And who doesn't want to go to the busy beaches? Get all those chicks playing beach volleyball. We like a bit of beach volleyball, don't we? So you want to be busy. You want to get to that location. You don't want to be sitting at the empty location doing feck all. You want to get to that busy beach. You want to be starting to do some business up there. Pretty simple stuff. So we'll cover that again in classroom. We'll understand a little bit more about how the liquidity evolves, how the liquidity moves in terms of, well, that's what we're here for. To understand about how the liquidity evolves. What are the dealers actually doing in the world of real money trading? Not this crappy world of price action stuff. Price action is there for us to scoop up liquidity. It's not got any narrative at all attached to it. It's just about scooping up liquidity. So what are we looking for? Busy beaches and reasons to visit the beach. Reasons to visit the beach. Have you got something to sell? Have you got some business to transact at that price? How did that oil do, by the way, guys? How did my live shout on oil do? Anyone? Come on, seriously. We just went from 114.30 and it dropped down to 112 bucks. We called it live in the bloody room. $2,300 live call. You couldn't pay Goldman Sachs 100 grand a month for that information, could you? You couldn't pay Goldman Sachs 100 grand for that information. Not a chance. And yet here we are, 114.30, dropping to $112. Call live in the room on the right-hand edge of the charts when this candle here was forming right there. And we were talking about this Grail narrative in the background, and we said, right, this is a sell, and there she goes, boom, straight down, over $2,000 profit. Inside of how long? 18 minutes to 26 minutes, 8 minutes, guys, 2 grand. And people say, you can't make 100 grand off of one lot. Bloody hell, of course you can. We just made 2 grand on a one lot inside of 8 minutes. People think it's impossible to make 100 grand in a one lot in a week. You can't make 100 grand in a one lot in a week. You're doing something wrong in these narratives because this is a highly volatile market, right? We should be absolutely destroying this stuff, guys, at the moment. Destroying this stuff. You've got to know what you're doing. Other questions today have been about bonds, about some scalping on bonds. We'll be touching on that. We'll be looking at the rebalancing of the DV01s. What's the DV01s? The dollar value of 1 basis point. What is 1 basis point? 1/100th of a percentage interest rate movement. So we're going to be looking at the DV01 rebalancing as far as that scalping. We'll be also looking at the movement of the 2s, 5s, 5s, 10s. We'll be looking at that 2s, 10s narrative. But we'll also be using that to try and look at the idea of how's the 5s, 10s going to behave. And because of that, we're going to be looking at the FOB spread against the NOB spread at the back end of the curve. We're going to try and understand that a little bit better to make sure that when we're looking at these things, we're not making mistakes. We're not making mistakes by simply reading the 2s, 10s has to be a sell, the 2s, 10s has to be a buy because the fight is steepening or flattening. Well, that's not good enough. We need to know whether the fight really is a buy, and we can do that by establishing what the NOB spread is doing and what the FOB spread is doing. The 5s, 10s, sorry, the 5s, 30s and the 10s, 30s. If we can figure out what those two are doing, we can simply find out whether the fight is going to be buying. And if it is, we don't want to be on the wrong trade. Very careful with that narrative, guys. Very careful with that narrative. So we've got a lot to cover today, guys. We'll be looking at the outside in. Outside in, of course, low volatility markets. Inside out, high volatility markets. When do we move into high volatility market? When we get a RGL, right? High volatility comes from RGL narratives. Wherefore we trade from the inside out. When we get a low volatility narrative, we trade from tops to bottoms, sell side to buy side, sell side to buy side, rotation. Liquidity grabs at top edges, liquidity grabs at bottom edges, and that's how we make our trades. That's how we make our living, guys. Those little liquidity grabs. I'm going to grab a little bit of lunch. I will be back in 10 minutes. I'll see you shortly.